Hey everyone, and welcome. Today, we're jumping into a process that, let's be honest, can be a real headache if you don't get it right. Vendor prepayments in Dynamics 365. We're going to break down the strategy, the setup, and the day-to-day execution to turn this from a chore into a seriously powerful tool for your business. So here's what we're going to cover. First, we'll tackle the big why. Why would you even pay a vendor upfront? Then, we'll look at the two different ways Dynamics 365 lets you handle these payments. After a quick run-through of the setup, we'll walk through the entire lifecycle, from the purchase order all the way to paying that final bill. And of course, we'll wrap it all up with some best practices you can start using right away. All right, first things first, let's talk strategy. Before we get into all the clicks and buttons inside the system, it is absolutely crucial to understand the business reasons behind this. Why are we even doing this? I mean, it's a fair question, right? Why on earth would you pay for something before you even have it in your hands? It kind of feels like you're just sending cash out the door and hoping for the best. But believe it or not, there are some incredibly smart, strategic reasons to do exactly that. The truth is, prepayments are a huge part of doing business. Think about it. You might need to lock down some rare materials before the price skyrockets. Or maybe you're working with a brand new supplier, and a deposit is just a way to build trust. And for things like custom-made equipment or anything with a super long lead time, yeah, a prepayment is almost always part of the deal. It's all about making your supply chain more secure. Now, here's the part your accountant really wants you to understand. When you make a prepayment, it's not an expense, not yet anyway. It's actually an asset on your balance sheet. Why? Because you've paid for something of value that you're going to receive in the future. It's basically a claim on goods or services, and that claim is a valuable asset. Okay, so we're sold on why we need to prepay. Now let's get into the how. Inside Dynamics 365, you've basically got two different paths you can take, and picking the right one is going to make all the difference for your control and visibility. The easiest way to think about this is with a simple analogy, the journal-based method. That's like a sticky note, a simple IOU. You send the money, you make a note. It's quick, but it's totally disconnected. The PO-based method, though, that's like a formal signed contract. It's built right into the purchase order process, giving you a crystal clear audit trail from beginning to end. Let's really dig into the differences here. The PO-based method is directly tied to a specific purchase order. The system knows exactly what that money is for. But here's the real game changer, visibility. With the PO-based method, you get automatic notifications when the final invoice comes in. This little feature is huge for preventing someone from accidentally paying the full invoice again. The manual journal method just can't give you that kind of safety net. Okay, before we walk through the whole process, we need to take a quick but super important detour into configuration. I know, it's not the most exciting part, but getting this right from the start is what makes everything else run smoothly. It's a do it once and you're done kind of thing. It really just boils down to three main things. First, you've got to set your accounts payable parameters to tell the system how to handle these payments. Second, you configure your posting profiles to tell it where on the general ledger that prepayment asset should live. And third, you create a special procurement category just for these transactions. Simple. Now, this application policy setting, this one is a big deal. It completely changes your user's experience. If you set it to notification, D365 will pop up a little reminder, but it's still on you to apply the credit manually. But if you choose automatic, the system does the work for you, adding that credit as a line item on the final invoice. For my money, automatic is the way to go to cut down on mistakes. All right. Setup is done. The foundation is built. Now for the main event. Let's walk through the entire PO-based prepayment lifecycle from start to finish. This is where you'll see all that setup work really pay off. The whole thing really happens in three main steps. 1. You define the prepayment right on the purchase order itself. 2. You generate the prepayment invoice. And 3. You pay that invoice. That's it. So let's break down each one. So step 1. And here's the absolute rule you can't break. The purchase order must be confirmed. This is your control point. It means everyone has agreed to the terms. Once that's done, you just hit the prepayment button, tell it whether it's a percentage or a fixed amount, and link it to that procurement category we set up. Next up, you generate the actual prepayment invoice. This is a critical moment because this is what creates the first official entry in your accounting system. D365 debits your prepayment asset account, putting that value on your books. And then it credits accounts payable, which shows you now have that obligation. And finally, step 3 is paying the bill. Now, one of my favorite little features is that you can actually start the payment process right from the open prepayment screen. It's a small thing, but it just keeps everything neat and tidy. You create the journal, post the payment, and you're done. So after you've paid, you'll see this status pop up: unposted paid amount. So what does that actually mean? It's simple. It just means the cash has left your bank, the vendor's been paid, and that value is now sitting nicely in your asset account, just waiting for that final invoice to show up. Perfect. The deposit is paid and accounted for. So now we move on to the final act, tying it all together when the goods finally arrive and the vendor sends you that last invoice. So the final invoice lands on your desk. Because of our setup, you'll see that friendly notification from the system. You'll just use the Apply Prepayment action, and this is where the magic happens. The system automatically adds a negative line to the invoice for the deposit you already paid, which brings down the total amount you still owe. It's perfectly clean, super transparent, and leaves a great audit trail. And if you want to geek out on the accounting for just a second, let's look at what's happening behind the scenes. When we posted that first prepayment invoice, it was a really simple entry. We debited our asset account for $4,000, and we credited accounts payable for the same amount. That's it. And this is how it all gets reconciled. When we post the final $8,000 invoice, the system debits the full expense. But check out the credits. It reverses the $4,000 from our prepayment asset account, clearing it out. And the other $4,000 goes to accounts payable. So the full expense is recorded, but the system knows you only owe the remaining balance. It's beautiful. Okay, that was a lot, I know. But we've gone from the why all the way to the final accounting entry. So let's wrap this up by boiling it all down to the most important takeaways and best practices that are going to help you nail this process. So if you want to make your life easier, here are your 4 golden rules. 1. Standardize your procurement categories. Don't go crazy, just a few is all you need for consistent accounting. 2. Always, always, always enforce PO confirmation before you pay a dime. No confirmation, no prepayment. 3. Use that automatic application policy. Seriously, let the system do the work for you. And 4, make it a habit to check that open prepayment screen every month to catch anything that might have fallen through the cracks. And that really brings us to the final question you should ask yourself. When you look at your own company, is your prepayment process a true asset that helps you manage your supply chain? Or is it a liability that's just causing confusion and risk? With the right setup and process, you can make sure it's always the former.